Well, good morning, everybody. So, wanted to this morning just cover some data, some bullish data around Bitcoin, this move up. Let's see how sustainable this move is. Let's talk about the moving averages, what they tell us, how we can maneuver around them. But as usual, I'm not a licensed financial advisor, so anything that you hear me talk about here today is just my opinion about what I'm seeing in the markets. And if you were to take any trades blindly based on anything you hear me talk about, you're going to end up losing all of your money and living in a van down by the river. Now, with that said, let's get into the data. We're going to start with the chart here. And the main thing, clearly, I talked about this a lot, right? The mistake that I made recently was being overly bullish, looking at on-chain data. Good morning. And is this not showing up? Hold on one second. Let me get that fixed. And 1 second. I got this. Why is it not showing up? There we go. Well, I may be having trouble with this chat box thing. Alright, so never mind on that. Alright, I thought my chat thing was working, but apparently not. So, back to the moving averages here. So, I made a point of saying that, one of the mistakes that we made was not selling right here. So I have a rule, generally speaking, that I trim spot when we lose the 50 and the 120 day. Recently, I've been fading the 120 just to kind of highlight this. I know a lot of people have heard me talk about this a lot in the past. The reason is it's been more at the midpoint of this move, and with this kind of sideways range-bound price action, the 120 being at the midpoint isn't the action that I want to be taking when it's range-bound. I want to be taking action more toward the top and the bottom of the range, which is the 50 days going to give me a better shot at taking action in this kind of range-bound market. When we get back to a heavily trending market, then I will be more patient and waiting for the 120 largely. But nonetheless, I should have trimmed at the 50 and at the 120, right? So I did trim when we lost this high right here. When we lost this swing high, this is where I got out of leverage, and I should have trimmed spot there as well in hindsight. But I also should have trimmed at the 50-day right here. Now, let's back all that out. That's what I should have done. So let's not repeat those mistakes moving forward, but that's on the buy side as well. So here, we were pretty aggressively watching a break of this trend line. So right there, when we want to attack, when we line things up like this, we don't want to be afraid to attack when we see things lined up like this. And why did my music stop? Oh, you guys can hear the music anyway, it doesn't matter. Okay, so when I see this trend line break to the upside right here, we were lining that up for a very long time. It was time to attack. And we did. There was a 4-hour, if you look at this 4-hour right here, we consolidated underneath it and then broke, and that's where I attacked. And the same is true, in my opinion, now that we've broken the 50-day moving average. Just like it should have sold into this retest of the 50, we should be buying into the retest of the 50, in my opinion, not financial advice. But I took my own advice. I had an order overnight on this weekly support level right around 43,000, and it ended up filling. So we got a hit on it on KuCoin, which is where I'm trading. But so that ended up filling for me. Let's go to the next one. Hold on a second. And so again, taking my own advice here. Now, I actually thought I'd cancel that order last night, I'll be honest with you. I thought I'd cancel this right before I went to bed because I was looking for a quick wick down and bounce off of it during the day yesterday, but that never happened. So I thought I'd cancel it before I went to bed, but it filled overnight. So interesting. But nonetheless, I'm in strongly in buy the dip territory now. Let's see if I can get this chat thing. Good morning. Could you talk about interest rates in 2017? We can talk about interest rates, yes. We can talk about interest rates. We'll look at that here in a minute, okay? So, why am I such strongly in buy the dip territory? Well, just like over here when we lost the 50-day, it's just a good area that uses momentum change. These momentum changes happen every once in a while on Bitcoin. This was a clear momentum change. We lost some key levels, and we taken out the swing low. And when you came back into this area to retest it, you're likely going to continue that momentum downward when you get to one side or the other of one of these major moving averages. Like the 50-day has been really, really good lately. Same thing here. We had all this downtrend structure, right? I've drawn this a couple times as a descending wedge. That descending wedge pattern, when you get a strong downward move like that, it's just relentlessly down. Odds are you're going to get a bounce out of that pattern, and the target, generally speaking, for most people is going to be this 0.5 retrace, which is 51,000. Now, of course, these bounces can stop as low as like the 382 retrace, which is pretty much what we were pretty close to coming into there. That's 46,800 on this chart, right? So a bounce up to that level is really kind of the first area we're looking at. However, in the context of this bounce, we've closed a daily above the 50-day moving average, which kind of changes the tune a little bit for me here. And the reason for that is all this data. Let's go to all this data. Let's see if I can't fix real fast. Let's try grabbing this data here. Yeah. One second, I'm trying to fix something. I'm trying to fix the chat, the ability to pull up my chat. I don't know what the deal is with it, but let's just go through this data. Hi, thanks for the stream. I love their please .USD and potential. Is that a spot on the dip? No, that was a leverage buy actually. So I'm now in leverage. So ever since this is my leverage entry over here, right? And then I took profit on leverage over here and come into the weekend, and then I bought the dip back about the same area roughly. And then now I'm in, this is a new leverage trade. The stop loss is currently here, and I just bought here, added to it here with the same stop loss. So I have a slightly profit stop loss, and so all in all, it would be a net break even. So I made a nice profit on this move. This dip buy right here, and this dip buy here, if they both were to be stopped out, I'd be break even, roughly. So I added enough, moving my stop into profit over here. What I did is I calculated how much in profit I'd be, and I added that much more on this dip buy here. So both my stops are right below this wick right here. Just below the trend line, below the 50-day. Would mean that we're rolling over pretty well. If we get down there, odds are that this move ends up being more of a fake out. Maybe we're going to even retest these lows. But not what I'm looking for these reasons. So yesterday, as I tweeted here, we had a huge 15,000 coin draw off of exchanges. So a very massive withdrawal. Somebody big came in and bought yesterday. Now we had the very bullish news about KPMG, which is one of the big four accounting firms. And now I'll go find that news here. But yeah, they bought, I tweeted, no, it's not the official news, sorry. But they bought Bitcoin for the corporate treasury. I think that's probably what drove the price action yesterday. Now, if you look at this, a lot of times that type of news, people will say that you'll see those news come out after price action, and it's the market looking for an excuse as to why the breakout. This is all this bullish news because of a breakout. I think it's more, to me, it's more clear evidence that there's people that know the news before we do, and they're buying ahead of that, right? So this strong move out of this area, this breakout, was probably people that caught wind of KPMG having bought, and maybe other things. There's Bitcoin Super Bowl ads from FTX, things like that. So there's a couple of potential catalysts, but a lot of times I think this is people front running those news events, and this is continuation on that news event right here. But that's a huge event. So if KPMG adds Bitcoin to their reserves, that means that their clients are going to be asking them about it now, right? And or maybe they're going to be advising clients about this. So that opens up so many doors. and probably a slew of bullish news that will be coming out of that. If you think about it, what happens in these Wyckoff events, right, which is clearly what's been driving a lot of these patterns lately, I think that perhaps this was meant to be the spring, and because of the broad market weakness, it actually dropped down to a lower level than maybe even intended. But nonetheless, this ultimately looks kind of like a kind of broken Wyckoff accumulation pattern where the second half of the pattern breaks down to lower levels instead of staying on the same level. So this ends up, technically, this is called redistribution. So this was a distribution pattern, redistribution, and redistribution. And then we had this accumulation and spring out. But there's, after you come out of these patterns, when you're in the markup phase, what happens is you have generally a campaign, a very bullish advertising campaign where all the bullish news that was being kind of maybe suppressed through here is now being advertised to help the market. I don't know exactly, I'm not going to try to speculate on why exactly that happens, but it seems to happen that way. So I do think that a lot of this time, these breakouts are front running those news events, and then we find out about it after the fact. But nonetheless, very positive, very bullish news, and we've taken again 50-day. Go back to my chart. So that big drawdown was somebody front running that data, but nonetheless, CryptoQuant and Glassnode are showing the same data. They show this as a legit drawdown off of exchanges, not some type of internal transfer or something else. Now moving forward, and these are very small, I didn't know these were small. Moving forward though, if you see the open interest here, we've seen a large increase in open interest. It means a lot more contracts are being opened against Bitcoin. So probably largely a lot of long contracts, clearly, as the breakout price is happening. But it looks like it was net short yesterday. If you look at the funding rates from yesterday, it was pretty heavily short. Let me go double check the data here to see if it's still showing the same. I'm going to look right now. Let's get a live peek at, yeah, still showing the same data from yesterday. Pretty strongly negative funding. That means that most likely that the buying was net short buying yesterday. So it seems like people are shorting this move up. They consider this resistance. Now we've clearly taken out this swing over here. You see this swing high? So this is a trend change, right? When you see this happen, you see this swing high get taken out like that. Up here almost 46,000. Wow, did that happen last night? I didn't know about that. Oh yeah, wow, we spiked up. I didn't even know that. I just woke up this morning and I didn't think about. So we spiked up, hit what, 45.5? No, that was yesterday. That was late yesterday, wasn't it? Let's see what time that was. But we swung up, hit 45.5. Yeah, that was late yesterday. But we took out this swing high in doing that. I guess that was after I went to bed. Yeah, that must have happened after I went to bed. It spiked up and then came all the way back down here to this weekly support level. But you took out this swing high. And so what we've done here so far is we made a low. We got some price action up into resistance and made a higher low. And then we broke out and we've taken out this swing high now. Now what we're looking for is another higher low to be put in. Now at this point, because of the strongly bullish momentum, I'm inclined to go ahead and buy coming in closer to this 50-day. Knowing pretty quickly where I'm wrong and if it might roll over. But back to this, again, net bearish. So people are shorting this break above this kind of more or less clear trend change. Now, in order to really solidify the trend, what we have to do at this point is make a higher low somewhere, whether it be here or down here even, and then rotate and take that high out. And then you have a pretty clear trend change, and you can very clearly define that we're now in an uptrend off of that price action. Let's go to, this is a busier chart. I'm going to remove all this, a lot of doodling we've done here. I'm going to get a fresh chart. So this is the reason I'm using this chart is so the two biggest sources of volume of Bitcoin are Coinbase, which is my main chart that I use for actual trading. And then I've been using the Binance chart to get the volume profiles here to go with. I've got a volume aggregator that has everything but Binance, and then I get the main Binance feed with Tether to Bitcoin and get the volume off of that. So get some good volume data coming in from Binance, which is the other major source of volume in the market. All right, so back to my series of tweets here, talking about volume. Yesterday, what do I make of Ada? Ada made a big move last night. I'm not sure why. There was some news or something, but we'll talk about DOT, Ada, and interest rates here in just a second. Good morning, everybody. All right, so trading volume. The trading volume was coming in on Coinbase yesterday, which is also very good, right? So clearly we had this China ban Bitcoin, and that caused a lot of negative sentiment in the market, the summer sell-off and everything else. So there's a transition from all those sellers in China having to exit the market, and that's mostly being absorbed by the West, predominantly the United States and Europe, right? But obviously all over the world we see adoption. But when you see a lot of buying volume from Coinbase, which if you look at the net total of all these bars that we had yesterday, I'll do an update here this morning. Let's look at the live volume profile here. That's what I tweeted yesterday. But you see this, this is a lot of extended, the net aggregate total. Now, this didn't happen all in one short spike. Like over here, we had a big spike on the 4th, and then it was a lot of Coinbase. And that was, is that sell side or buy side? I can't remember. Yeah, that's buy side. So that was a lot of buying activity also. But this is one big pronounced spike, and then it kind of died off. What we see here is more consistently high buying volume. If you were to add up all of these volume bars right here over this several hour period, it's probably larger than this very large volume spike within this quick drawdown. We've had, or it's pretty close, we've had a lot of consistently high buying volume coming in here. And we know this is buy volume because the price is moving up, right? Now, you can't tell for 100% certainty. But with price moving up this strongly, this is mostly buy volume. When you see heavy volume, a large increase in volume and a big move in price, that's predominantly buy volume, driven partly by shorts having to close. But that's going to be coming from the exchanges that have the most derivative action are not Coinbase. So when you see a large volume spike from Coinbase and price going up, that means that it's a buyer or a set of buyers on the West, probably in the United States, institutions, or North American institutions, I should say, really coming in and doing a lot of buying through here. That's generally speaking what that means. And then the shorts are having to cover mostly in other exchanges because they're the ones that drive most of the derivatives value, right? So what's happening is we have net spot buying driven probably by institutions in North America. You can see all this heavy Coinbase volume. And on the other side of that, you have traders that are going net short, likely on other platforms. And eventually, we know what happens when you have, we saw it over here. Over here, we had this move up out of this little area right here was driven by derivatives. And there was actually net spot selling. We could see it. There was net spot selling. There were some coins coming on exchange and a few other indicators that tell us that this is actually spot selling. And the futures funding rate was going through the roof to the bullish side, long side. So it was a very high funding rate. And that all snapped and took the market right down. And then the same thing obviously clearly was happening over here. High funding rates, and then the volume of spot buying slowed down greatly through this whole area. And then it was net spot selling all through here against mostly derivatives buying. Down here, this was mostly derivatives selling, net selling. The derivatives market was net short. And then the spot buying really started right through here. There was a lot of net spot buying. So you have these inflection points where you have net spot selling and derivatives buying, net spot buying, derivatives selling, net derivatives selling, or net derivatives buying, spot selling, net derivatives buying, spot selling, net derivatives selling, spot buying. So you can see what happens when we get these trend changes. Now, I've been saying this time and time again, I think most people are stuck in this 4-year cycle mindset, and there's a lot of people that got burned, thinking that we're going to have a blow off top in December. And I don't know if those same people are revenge trading or if it's a new set of traders But there's a lot of people that are expecting a breakdown of these levels and going into a bear market. They consider this a dead cat bounce. They're looking for this to roll over, to take this out and go down to something like $13,000 or some crazy, whatever 85% off from the top is here. But clearly, that is a huge mistake. So what's 85% off? $10,000? Yeah, so there's a lot of people that are shorting, thinking Bitcoin's going down to $10,000 because we're in a quote-unquote bear market, because that's what happened in 2017, right? But we did. The 2021 was clearly not the same as 2017 in price action. We've had a lot more consolidation in this range. This is a trading range. So I will continue to argue that because we have this broad trading range, it's a very different market. Now, to me, this trading range is a transition away from this boom-bust cycle into a more a cycle that's rooted in waves of investment based on more on adoption than on the supply squeeze caused by the halving, right? I think adoption and demand are the main drivers now, more so than the supply squeeze. That's just my opinion. But going back to these data points. All right, so we see this inflection point. Net spot buying clearly coming in from Coinbase. A lot of institutional spot buying from institutions in North America against net derivatives selling. So it's probably traders, smaller retail traders mainly, but could be larger traders as well that are going net short against this. Okay. All right, so back to the thread here. We talked about volume. Talked about this trend line we were watching. We had this very bad breakdown on the trend line, caused a lot of us to get defensive, and then now we've retaken this trend line here. So I think this is a really big deal. Both the 50-day and this trend line being retaken. Now, again, we've only closed one daily above it, so we shouldn't probably overreact. Should stay somewhat defensive and keep good risk management through this. But should we hold this for a few days and maybe get another weekly close above all this, that's going to be a very bullish indicator indeed. And then lastly, it looks to me like if you look at all the net derivatives selling, the short side, people who short the market are generally speaking probably actually a little bit more advanced than the YOLO long, the kids that put a couple $100 in and go 100x long and they get wiped out. People that are probably selling and shorting against the market are probably a little bit more sophisticated than the average long. So they're a little bit more responsible, most likely, with their short positions. So they're less likely to get liquidated, more likely to be stopped out. But the short side liquidations really haven't picked up here. We've seen a small increase on the sell-off, but really are in this bounce here, but not anything super substantial like we saw, when the derivatives was even lower and it was stacked very strongly the short side over here. Now, if I go look at the actual, do I have the derivatives data? Let's go look at the derivatives data real fast. I think I put the derivatives here. Let me just go pull that up live. I want to look at real fast, and then I'm going to get to the questions. All right. This is open interest. So I want to look at total open interest, and what I want to do is I want to compare that to summertime. And I think because we've seen such, relatively muted short side liquidations, I think there's some bigger short side liquidations to come. And here's why. You see the derivatives market? This is the total open interest. Compare that to, I don't have the quick math in front of me, but you had, 30 billion. Is that 12 billion? I don't know if I'm looking at the wrong scale here. Yeah, okay, so sorry. Here it is right here. So over here in summertime, we had $7 billion in open interest equivalent, right? And then we had this move up, and you saw these big liquidation spikes. So these big liquidation spikes, this big one right here, these couple of bigger ones over here, was on open interest that was much lower open interest, right? So 7 billion. Today we have $12 billion worth of open interest. Almost double, not quite, almost double the total open interest from over here. And it is probably not as much net short. So if I go back to this chart, and we'll look at this data over here. We haven't had the same duration and severity of net short that we did in the summer. So there's that small piece. But we've had a lot of short derivatives OI all the way down on this whole move. So point being, the OI, you see right here, this little OI dip right here. So you see these two big dips. So as we came out of this price action, we had a big liquidation event right here and right here. That was the short side of the open interest being wiped out. We have not had a huge dip yet in these big dips like this. We had one little one here. I'm expecting a much bigger dip with a much bigger open interest wipeout of the short side of the trade. You see here this big spike. I guess that was a long side OI wipeout right there. This was the short side. This is this one right here. Point is on this move up, this is net derivative selling. So let me back up here. I'll look at one more thing from the summertime. As price moved up, it was net derivative selling until we got this big move up here, and then derivatives went back to the long side here. And then this is where over here, right here in early September, we had net derivatives buying, but it was actually more spot selling, and that caused this big collapse. Okay, so the market appears to me that the point is that I'm seeing signs that we probably have more selling, more short squeeze ahead of us. But this is my opinion. All right, let's get to questions. That was the end of my kind of thread, my discussion here. Yep. So I'm looking for a couple of larger spikes of short liquidations, and then we'll have considered, I think around 46,000. If I look at the chart, 46, a move into 46 to mid 40s should be that liquidation wipeout. So that seems to be where most short players, there's a lot of short stops right up here into this area. And we probably hit that big spike right there was taking out a bunch of them. But there's a lot in this area right here. A lot of people went short as we broke down right here. So that's going to be the area when we finally get up in there that's going to cause those short side liquidations, because that's where all the stops are at, all the way through here, I would think. All right, let's get to questions here now. So we had a question about in 2017 we had a lower low on the monthly before going down. We haven't done that yet. Yeah, so like on the monthly chart, let me start at the top with questions here, but on the monthly chart, it's definitely still an uptrend, right? So if I just remove these moving averages, this is playing some stupid music. Here we go. I mean, it's still a net uptrend, right? On a monthly time basis, it's just the time frame you're looking at. And I trade on longer time frames myself, right? So I'm not in there looking at even hourlies really. Net, this is an uptrend still, right? We're still moving in this direction, generally speaking. And this is a trading range, but we can probably pretty safely draw. I don't know, has anybody done this? I think every time I do this, it's not yet been a really good symmetry, but it might be now. Let me try it right now, just live. I'm just gonna draw me a little trend line right here. We're gonna take and clone that down here. Oh, look at that, perfect. Oh my God, I did not realize. That's something we should have been looking at. I did not think to look at that. But you look at this top trend line, touch, and then we have a perfect channel. No, we did look at that. No. That's right, we did draw a channel based on this. I've got a tweet somewhere of the channel. But that's exactly where we stopped. I've seen people tweet this because these two touches here, this lower on the Binance feed, it shows up really good. These two hits here, and then that bottom right there. So clearly we're in this like very gently ascending channel. So this is kind of more a trading range. So I've got these white lines as our trading range. Maybe now more accurately drawn as an uptrend channel. But yeah. So net, this is still technically an uptrend, interestingly enough. Okay. Now DOT USD. Let's look at DOT. All right, back. DOT USD. Let's start with a fresh chart on DOT here. So when I look at a fresh chart, a lot of times I'm just looking at, all right, throw these couple moving averages on here. Get me a sentiment read here. Yeah, so the alts haven't taken out. Now I can't look at DOT without looking at the Bitcoin dominance chart. And I see Bitcoin dominance has had this like triple bottom almost, and it's breaking out of this downtrend structure, put in a bit of a more or less a bull flag or some kind of bullish structure here, and it's breaking to the upside now. So that gives me pause of taking too big of positions on altcoins. But Polkadot has fundamentally has a lot of upside. It's one of the more viable cross-chain, multi-chain platforms. But looking at it, so the moving averages, we're in a downtrend in a short time frame, but the 200-day is still in a broad uptrend. Very similar. I mean, it's pretty much the same exact chart as Bitcoin, right? I mean, a lot of these are just leverage plays on Bitcoin. But there you go. Perfect, kind of more or less a channel in the bottom of the channel right now. Let's go take a look at the weekly. Not a lot to work with here because our next weekly resistance is up here right around the 50-day. All right. And the support's, $80 or $18.15 on the weekly. Let's go to the daily. Let's see what we got to work with on the daily here. A little more prescriptive. Same basic view though. Resistance up here at 23, just below the 50-day, which is what we've come into. So all in all, I mean, this has been a pretty strong downtrend. Let's just look at the trend line here. Let's just connect some of this price action through here. I don't like that. The reason I don't like that is this is what the market's showing me more recently, and I have a recency bias. So you see this hits right here. So this is a good area to look to kind of validate a trend change. And this might be slightly earlier, but you see this trend line here, these set of touches, this kind of bowl pattern. People are going to call this a cup and handle and all kinds of stuff. I don't look for cup and handles, by the way. I don't care. But I just look broadly at trend lines and momentum. At the end of the day, I am a trend trader. So what I do is I look for long-term trends, and I try to buy into support in long-term trends. So ultimately, this is a move to the bottom of this trend line here. Not a bad place to look into down here. But now we got some recovery. So this is good. We're getting the first stages of recovery. The problem is, on this particular chart, there's some resistance right here. That's the daily resistance. I'm not going to go to the weekly levels. They weren't prescriptive enough for me. I would say if you get a concurrent break of all this trend line, this daily resistance, and the 50-day moving average, what I would be looking for is a break of all that, and then come back to retest. And in this area here is where I'd be looking to attack when we get back to the 50. And this daily support that was broken as resistance. You can see it curled over pretty heavily, just coming underneath it. So for me, that's what I'd be looking for. This would confirm this uptrend, right? So again, as a trend trader, I'm looking for stuff that's just trending. And this is just like Bitcoin in a very broad uptrend. These very pronounced swings up and down. So I'm looking for this downtrend pattern to clearly break. And this was not as clear of a downtrend pattern as Bitcoin was. Like this is a little bit more of a raw pattern, but sorry, I still have residual cough from COVID. Like I have I'm well over COVID, but I still just have some like lingering. Anyway, sorry about that, guys. Is it? But yeah, that's what I'd be waiting for on DOT is a break of that. The key level to watch is this horizontal. Now, trend lines. Going back to that statement about trends as a trend trader, trend lines help me identify the trend. They don't help me identify entries or risk management. All I do is I use the trend lines to identify, am I on the right side of a trend, right? So I'm in a broad uptrend, but I'm in a short-term, very strong downtrend. I'm looking for clear evidence that we are breaking that downtrend. Now I'm going to draw one more trend line through here. That's not going to help me at all. It broke right there, but then, these really steep trend lines, you can't do much with them, in my opinion, just because you can break them and then continue to follow them down, and they go to zero pretty fast. Like if you draw a trend line, right, and if you just follow that trend line and within a couple of days it goes to zero, trend line's not an actionable trend line. But that's a little bit of a pattern here that we're putting in on the downside momentum is definitely slowing down. This is what I'm looking for. I'm looking for momentum to slow down and start to curl the other way. And so I'm a momentum and trend trader. So I'm looking for the momentum to have shifted back from this short-term downtrend back to this long-term uptrend. And where I would get clear evidence that the momentum is changing back to the positive side is price action that looks something like this, right? And, you know, probably more abrupt, it's crypto, but, you know, this sort of price action, I would be willing to take a buy coming into this area of support here. And what I often do is I'll wait for the first, like, wick into this price. So I'll wait. So I go all the way down to the 4 hour. And very often what I do is I wait for the 4 hour to print a 4 hour candle and a wick below whatever that is, and that gives me my anchor for my stop loss. And the next touch of that, I will then buy that support with that anchor, that wick below, because I want to see this start to march up. And that gives me a nice tight entry, stop loss, and if it were to wick below that, then, you know, we're out of the trade, and we look for the momentum to confirm back to the upside again. We'll try again. The other thing I do is if that trade worked out, a lot of times I don't take the entire position on the first one. Sometimes I do. Depends on how I feel about it. But on this 4 hour entry like that into support, the next thing I would do is if I get a 12 hour candle, once I buy that support, let's say we never wick below it and I hit this support level, if we've consolidated here for a little bit, the next 12 hour candle, so if this becomes a 12 hour candle with a low down there, and then we print another 12-hour candle. It's a tightening range, and it holds that line. On resumption out on that 12-hour candle, I will then add another piece on, stop loss between, you know, below there, and then hopefully I buy with momentum to the upside. I prefer buying with momentum at all times, right? So, but in order to get the best risk-reward profile, it is advantageous to buy a test into support after you've seen that first bounce. So this is what I try to do, is I try to wait for a break, that very first bounce that gives me that anchor for my risk management. Then the next retest of that support level is where I'm in at. And then again, if we get some more consolidation, it'll look like this on the 4 hour, but ultimately it'll be a couple of bar prints on the 12 hour. That's the other entry I like taking, is on resumption, taking out a tight 12 hour retest candle, and that resumption trade is a good place to add as well, in my opinion. So that's what I'd be looking for on DOT. Now the project, the technology, I've talked about it extensively. You know, the way it works, 120 parachain slots. It's a sharded ledger with 128 shards. Each chain is its own shard, basically. And so they're all orchestrated together, they're tied together, and there's a lot of interchain interop. And I'm going to throw some Doge-wave up here and be right back, and then we'll talk about the other questions we had. But I've got to step away for just a second here. I'm going to give you guys some Doge-wave while I step away for just a second. All right, I'm back. Sorry about that. Okay, so back to what we're talking about here. So that's how I would handle, you know, trying to get into an entry on DOT. Now, somebody asked about Ada. Ada is overall my favorite crypto project because I just tweeted yesterday. I literally just tweeted yesterday. Eagle is still the best investment opportunity with the large caps. This is true. That's the way I still view it because of the discrepancy in market cap. I don't think. When I go to this list here, right, and I look at the major cryptos, I think Cardano, XRP recently, this must be good news about the SEC thing, but I think, you know, on this list, the strongest projects are Cardano, Polkadot, Avalanche, Polygon's up there. Obviously Ethereum, let's not count Ethereum. Polygon is definitely up there, and Cosmos. And then the next best project out of this entire list is all the way down here. Where's Eagle at? Did it fall back that much? Or am I just missing it? Hold on. Let's go find Elrond. Elrond. 42. Wow, it's below Tezos. Come on. That's ridiculous. All right, it's way better than Tezos. Like, it's not even in the same ballpark. Like, Tezos should be nowhere near Elrond, and this market cap is retarded. It's below VeChain. Okay, yeah. So Elrond is still by far the best investment on this list. Holy cow! I didn't realize it was that far down there. The next best is probably Avalanche, but man, with a $21 billion market cap versus Elrond's $3.5 billion. But what do I think of Cardano? I love Cardano. It is my favorite project on this list outside of Bitcoin and Ethereum, because I think in the very long term, it has the best chance of actually capturing the largest market share because it is so drastically different from Ethereum and the rest of the Ethereum competitors that while that's why I don't think it's an Ethereum killer per se, because Ethereum with its accounting model is more efficient for some things. But if you need like absolute 100% reliability and security, Cardano is going to be the place that those projects are going to gravitate to. And it's different enough once they get Hydra scaling out and everything else too to have nearly infinite scaling that it's my favorite. It's my favorite of the large caps. From a technology perspective, and it's really because it's built so drastically differently from the rest of them that it really stands a chance of really building out its own niche and capturing its own major market share. But at $39 billion, $40 billion market cap versus a project like Elrond, I'll just tell you, I mean, my current allocation is I've got about 4 times as much Elrond as I do Cardano. Cardano's my third biggest, right? So I've got Bitcoin's my largest. And then Elrond's by far my second largest. And then Cardano's like my third, but it's a pretty big gap between Elrond and Cardano. And then I've got, a smattering of a little bit of Avalanche and Matic and some of these other projects that I talk about all the time. I've got a little bit of all those. But the Sandbox is another one I have. Like the Sandbox is great. I own land in the Sandbox. I own sand. I have some sand. But still, there's no way on earth that it should be ahead of Elrond. That's crazy. This is crazy. I mean, I guess I could see why, but it's insane. This list is insane to me. Solana and BNB, what a bunch of crap. XRP. All right, anyway, whatever. So I hope that answered that question. What do I make of Ada? Let's look at the Ada chart. Ada come into the 50 right here. Same, probably almost exact same deal as Polkadot. You see this trend line that I've got here. I bought some. I bought this breakout over here above the 50, right here. This first breakout, and then it rotated below. I made this purchase more for a very long term to add to. So I have my long term HODL bags that are staked. I didn't want to remove that staking. I just wanted to keep them. I have them in a cold wallet, offline, everything else, right? Running a full node and all that jazz. I didn't want to mess with that stash of Cardano that I've had for a long time. So I bought fresh to put a little bit of funds, and I bought right here this. So I'm underwater on that purchase. So it was actually further up. But I did buy Cardano just for the purpose of yield farming. And wasn't trying to time the market too much. It was the first 50-day close. The first close above the 50 days is really what I was looking at. So I was like, all right, I'm good with buying here for the very, very, very long term. If it goes down, it goes down, whatever. But this is for yield farming. So this is what I've committed to Sunday swap. And so this is now on Sunday swap, farming more Sunday, right? So I've swapped some of that for a couple of the coins that they have and been providing liquidity on Sunday swap. But that was not me trying to make a trade. This was me just adding to buying a small amount, really, relative, very in the grand scheme of things, a really small amount, just for yield farming and on Sunday swap. But you can see here, this trend line is what I'd be waiting for this trend line to break clearly, get some consolidation on the other side of it, and then off you go. That's what I'd be waiting for trades on Cardano. Accumulation again, normally if I was trading this, if this wasn't locked up doing yield farming, I would have sold, right through here, right? So that would have been my purchase, and I would have rotated right back out, small loss there, and be waiting to buy again back over here if we break back above the 50 again. So that's one way to do it, is just to buy close back above the 50. I'm on the 12-hour time. Let's go to the daily. So you can do that knowing you've got this trend line out here ahead of that. If I was looking to accumulate Cardano, for the long term and not really trying to trade it, if I was just looking at accumulation, I would buy a daily close above the 50, buy a support retest. So when you break this trend line, 9 times out of 10 you come back to retest the support. The horizontal. I'd try to buy the horizontal level, and I would keep DCAing in all the way up until we took out this 200-day moving average. On the north side of the 200-day moving average, I would quit the DCA activity. But those would be some triggers for me to start. I'd start DCA above here. You know, all this price action out here, I'd be DCAing in, buying in any dips into support, and then I would want to be fully positioned. If we were to break and take the 200 and start moving up, I would not be adding to my position anymore. I'd just be letting it ride. And then clearly, you know, when you see price do something like this, I mean, that's not, you're going to see on forums and Discord and everything else people talking about, oh, it's the greatest thing since sliced bread and they're going to take over the world and this is going to keep going. It's not going to keep going. Things don't move like that and just keep going, right? They eventually come to a top and roll over. So trim a little bit on a big parabolic move like that. It's a simple game. Draw yourself a parabolic uptrend. When you start to see that it's slowing, it's just that same momentum thing, right? So what I just trade momentum. It's super strong momentum to the upside. Some point that momentum is going to slow down and rotate over. And here, you want to catch this momentum move. I don't want to catch. I'm not trying to catch the top. I'll never be able to do that. Nobody ever will. I mean, maybe they can. Some way you can do it. Maybe with fib levels or something, you could actually catch pretty close to that, right? And so if you do come into resistance and you're selling into like a fib, you know, extension level, then good on you. Really what I'm trying to do is I'm trying to see where it hits resistance and starts to roll over. And that resistance, when it creates this slowing of price as we struggle to get through it, as it rolls over, that's where I exit. That's where I trim at least. Maybe not exit entirely, but trim. So just some that's what I make of Cardano. I think it's a great project. And really, I mean, all of these, right? What they depend on. Let me just back up. I didn't start my session with this, but I meant to. That I was wrong, right? I was looking for a big capitulation spike down. So far, I was wrong. I was looking for maybe the altcoins to really have one big capitulation spike, a la something like this over here. But you know, this severe sell-off is more than enough to have shaken most people out. So I think the market has done its job. The reason I was looking for one more big sell-off last week when we had my last session, live session, because we were coming into resistance here and I saw it curling over and I was thinking, okay, what makes sense is for it to just double hit this bottom here, give us a little spring and then out. And if that, we were talking about that, right? If that were to have happened, then the altcoins, they were all sitting right on support. They were going to lose that support and really spike down hard, but then probably bounce back very fast. So it wasn't something I wanted to overreact to as well. Just I wanted people to be aware of. But Bitcoin is breaking to the upside here. It appears that, like Cardano, went ahead and held this very key $1 support. And you're going to get confirmation of that when you get back above the 50 for a second time. You see this first test above the 50, we hadn't quite hit that support level just yet. So you get this kind of fake out move, get people like me buying for yield farming, and then come back down to $1 and hold this support, and now you're breaking back to the upside. If you close above the 50, close above this trend line, and build new support over here, then you're again back in that trend change. What you're looking for that trend change, and you already took, another thing too, is we took out this swing high over here. So we're kind of in a, right, so you had a high, a low, a high, a low, a higher high, but a lower low. So you've got this kind of broadening. So we're kind of reset now. At this point, we're looking for this high, we're looking for a higher low, looking for a push higher, and start to get out of this area. So this is the swing high you want to take out at this point. You want to create a higher low, take that swing high out, which would probably result in a break of this trend line, right? And then come back into this area that you just broke of support, and then continue marching onward. That's what we're looking for. And when you get that kind of confluence of multiple times, taking out this swing high, making a higher low, and then especially if you take out this swing high, it's going to be a ways over here. You're probably pretty good. But at that point, you see some other overhead resistance here. Clearly, what was that level? 150, 160 was resistance. So, you want to be cautious. 180 is going to be a pretty key area on Cardano as well, right around the 200-day. You see a lot of price action from over here. Just see all this stuff. It's kind of a key swing level right there too. So anyway, those are my thoughts on Cardano to answer your question. I hope that answered your question there. Appreciate the volume talk. Why isn't Binance included in Bitcoin data sites? Does it have much more volume? Does it not have much more volume than many other exchanges? I think because of the they don't have good APIs. They don't provide that data well, so it's very hard to programmatically pull the data from Binance. Again, they don't have a good API that provides that data. I don't know why. Apparently TradingView is able to get it, so I don't know why you wouldn't be able to pull it out of TradingView. So that's a good question. I don't know, because the data is right here, right? So, and I'm pretty sure TradingView's got some pretty good APIs. Don't know if maybe if they've got an agreement to not resource this data after pulling it. That might be a part of the problem, but I haven't looked into exactly why. From a technology perspective, they just don't have it there, so I've got to grab it from both places, right? So I look at this data here. This tells me really what I'm looking for, and I look at this one is just the Coinbase and aggregate volume here. And Gemini happens to be in here, Kraken. So Gemini, Kraken, Coinbase are the main ones that like North American institutions and traders use. So this is a good gauge of North America. And then this volume profile over here for the TradingView feed is the best that I have for Binance. But I don't know why. Is it true that we had 3 interest rate hikes in 2017? On interest rates, let's look at the U.S. 10-year. I don't remember. I do know that the concerns about Bitcoin having a total collapse on a small interest rate hike is probably more fear and FUD than anything. The markets too, like the markets can thrive with 2%, interest rate, right? It's going to slow down. It's going to cause them more to consolidate. I've been saying for a long time, I think we're going to get maybe more range-bound activity as long as the Fed doesn't come in nuclear and go like 0.5, 0.5, 0.5, 0.5 and get us up to 5% interest rate in by the end of the year type of thing, which I don't see that happening. But, as long as they don't go completely nuclear and go quantitative tightening and get the interest rate up to 6% by the end of the year, a lot of these markets continue to thrive with still this very low interest rate environment. They're not going to go to 6% overnight, right? So 2%, 1%, it's not going to totally kill the market. It'll just slow the upside, which is what we're seeing. We're seeing the equities markets really, kind of had a little bit of a topping pattern. They're now consolidating pretty high, but they're not really rolling over convincingly, right? They're starting to show signs of weakness, but I still contend that this is going to be more of a range-bound market for while the Fed does its thing. The Fed's going to continue to do what they have to do to prop the markets up so they don't completely collapse. But I think at this point, they're probably okay with it going sideways is my guess, but I don't really know. But looking at the 10-year, the 10-year is breaking out. I've been seeing this is like the key level right here, 191. Once we hit 2% and break 2%, you see that swing high right there? Clearly, we're in a trend change on this thing, right? So we just talked about this earlier. So big sell-off, we put in some lows. And then we took out what was this little swing high here, over here, put in a higher low, and then a new high, but below this prior high, but then a low. So this is a trend change. We're now, at this point, clearly in a trend change. Now we're in an uptrend. Now this is like the last final fight over here. We're outside this trend line too, which is a big deal. And so the 10-year is definitely on the march higher. And this is, risk-on behavior, right? So this is traditionally good for Bitcoin. At some point, it may actually flip to where Bitcoin's more of a risk-off asset. But at this stage, Bitcoin's still on an exponential growth curve. So it's still probably more of a risk-on asset and will be for the next several years. And when you see the 10-year moving like this, it's generally speaking, the market's looking for, they're not wanting to buy bonds or wanting to buy riskier things than bonds, right? So it's just general risk-on sentiment. This is the market setting the bond rate, the interest rate, not so much the Fed. So the Fed discussion and the 10-year interest rates are a little bit different just because, again, the market is mostly setting this rate. All right. Hey, Mindy. You guys still can't see the Oh, hey, look. It's just an order of operations thing. So if I put this down here, look at that. I fixed it. Okay, yeah. So let's go here. Do you think it's our last chance to buy alts like Umbrella Network before they explode into oblivion? Last chance to buy. Buy as in to acquire. Let's look at Umbrella's chart. I haven't looked at Umbrella in a while because it broke down so severely that I just haven't been paying attention to it. But thanks for bringing it up again. Umbrella is one of the more intriguing Oracle competitors, right? So the big ones, the big competitors in the Oracle space. So the big Oracle being Chainlink, right? To me, these are I've got these. This is a space that I am interested in. API 3, the Graph, and Umbrella are the ones that I watch mostly in that Oracle space. And then Charlie 3 for the Cardano network too, but it didn't have a good chart. Charlie 3 is a Cardano Oracle service. Man, this chart's so wacky. Well, you're clearly you're trying to bottom out here. I had identified all the support sometime in the past, but you've got this. I mean, it's trying to put in a bottom here. It's got a ways to go until it proves to me that it's regained uptrend. So we put on some trades in this big spike move up over here, if you recall. But yeah, it's got some work to do to convince me that the Oracle space has been so beat down too. At some point, it's all going to explode, probably pretty unpredictably, and just take off. So you're getting a little bit of. Let me go to this recency bias and these trends here. There's a good trend right there. So you'll start to confirm that you put in a bottom when you break this trend line, come back into that horizontal wherever it happens to be that you break it at, and then resume up. I would give this one a little more room. I would wait for the next bullish pattern to form, maybe a bull flag or something underneath this resistance, and then a breakthrough. This is the daily chart here. You see a lot. I mean, it's just a whole bunch of confluence. If you look at all this price action here, yeah, 0.27. I mean, if you're looking for a very long term and you're really bullish on the project, buying this fear and this sell-off toward the bottom, I mean, you could probably do worse. I know you've been watching the space for a while, but yeah, I would as a trader, trend momentum. This isn't a very severe downtrend, and it's maybe wanting a double bottom-ish, but I'd be waiting for a lot more confirmation that we're starting to resume the uptrend to put trades on myself on this one. Well said about trend momentum. How do you trust the shift? Weekly, daily, recently 3-day printed up momentum, the 12-hour series. Yeah, my 12-hour chart's my main trading chart, right? I do take entries on, like I talked about earlier, the 4-hour stuff, but that's mostly at a very low level. I'm looking for multiple bounces. I'm looking for a 4-hour candle to give me places to anchor my risk management, really. Ultimately, I'm looking for 12 hours. So like here, now I did take this break again. So my last entry down here was on a 4-hour consolidation below this resistance. When I saw this high get taken out, that was my entry, right? But that's because it had done all this price action, consolidating just below this, broke down, and then it came right back into the trend line. That's a strong sign to me that it's wanting to break this trend line. Over here, all this price action. If you recall, I sold into resistance over here coming into the weekend, and I watched all this weekend price action ping pong around. And it was a 12-hour break to the upside that gave me the bullish indicator, and then I bought the retest of this support right here. So my trades actually were from here to here, and then from here up to where we're at right now. Now, one thing I will say is we had this breakout trend line, and we are starting to want to try to break down off of that. Generally speaking, what I do is especially with these really strong uptrends, I try to give it room to break down below, come back up into it, and then to rotate over before I'm really completely out. Or then I'm just waiting for the next setup, right? But at this point, we're just sitting on it. What's going to happen is if we put in a wick here and then resume up, I'll end up moving I'll end up re-anchoring this trend line on that price action. But it needs to print up and take out this candle. So the next 4 hour, I have to take out this price. As soon as it does that, then I'll re-anchor this. But for now, this is my, right, if you draw it like this, we're getting on this 4 hour, you're starting to get into breakdown territory here, but we'll give it some time to do its thing. But yeah, 12 hour, when I see consolidation of a 12 hour and a break to the upside, that's kind of my main indicator of momentum, short-term momentum. That's where I anchor most of my trades, is on really the 12 hour price action. Split the day into two halves. Oh, sweet list. Ada needs to deliver and then adopt if it has a chance to catch up. Yeah, I think the bearishness around them not delivering is a little misguided, but that's just my opinion, right? I think they're delivering plenty well. It's just people don't have the same kind of patience and fortitude, but when you look at how the project was, how it's built, and what it's built to do, the long-term mindset of it, I think they're doing everything they're supposed to be doing. That's just my opinion. But at what point will you cut your BTC position if we keep going up? Cameron asks. All right, so I've already said I'm looking to do like a pretty large reset of my entire account should we get to the 200-day moving average. So at any point here, this could be the top of a dead cat bounce move. As severe as this sell-off was, we have to all understand that it can keep going down, right? Especially if broad market sentiment turns very negative and we get like a broad market sell-off. If the Fed's really going to be very aggressive and the markets at large sell-off and everything goes pretty risk-off, then we can sell off a lot more. So, I'm ready to trim at a kind of a moment's notice. But at this stage, we just got this breakout. I'm more in the mindset of trying to push trades than I am into, figure out where I'm trimming. But when we get to this, you see this area between the 382 of the, so this is the fib levels from the breakdown, right? So you can't really see it here. To move this over so you can see the prices. All right, the 382 level is the kind of the first area, 46.8, that I'm really looking to watch closely and see what happens with kind of the fundamentals and price action. But I'm looking to do more or less an account reset right through here. So I'm really going to be watching very closely price action in this area should we get up into here. And I'll be anchoring, I'll be pretty aggressive with some stop losses, which means that I'll probably get hit on my stop losses. So my leverage trades in this box right here, I will probably end up getting stopped out somewhere in this box. I'll keep trying to push the trade as much as I can. But as soon as it starts to roll over, I'm going to get stopped out of my leverage trades. And then I'll have just below that probably, I'll also have some spot sells ready to go. So if we were to get up, so say the price action were to trade up into here and then roll over, by the time we break down out of here, I'll be probably I'll be out of leverage higher, and then I'll be out of tradable spot. So basically by exchange trade accounts will flip from Bitcoin into stable coins if we were to get this total breakdown. So I'll be very aggressive, probably stop under something like that. So you see how I'd keep pushing the trade. I'd be really aggressive with my leverage stops, be out of leverage up here, and then I'd be a little bit more lenient with my spot stops. But then if we were to rotate and roll all the way over, then at some point in this box, before we leave this box, I'd be out of my spot positions on my exchange traded accounts back into stable coins. Because again, there's definitely a world where this is a dead cat bounce into the midpoint of this sell-off and it rotates down and rolls over, right? Now we're going to see some things happen as this happens, right? So this would be if this is going to happen like that, right? If we do roll over here, I do want to coach all the statements with this thought process. What you're going to see is leverage flip, derivatives flip, very positive, where the funding rate's extremely positive. We had a couple of short liquidations, right? So a couple of large spikes in short liquidations, the shorts are now out. Funding flip, very positive. Sentiment flipping to heavy greed. coins coming onto exchange, all those type of things are going to be indicators. And that's going to cause me to be more aggressive with my stops, and or maybe even just flat taking profit. So say we saw a lot of that stuff happen. The futures funding rate, sorry about that. Futures funding rate getting very positive. Coins coming onto exchange and things like that. I might flat just sell coming into the 51, resistance up here, or even into the 200-day moving average if we were to see that type of behavior. So to answer your question, that's where I would cut, is in all that whole price area here is what I'm looking at. And then, most likely if we see all those things line up, you're going to have a big, correction to the downside. And if things flip back to positive, right, it's derivatives go back to being either neutral or negative, spot buying, fear, greed flips, and we see price wanting to put in a bottom, all those things, like confluence of data, then I'll get long again, sure, especially if it stays above the 50. So that's all what I would be looking for there. But the idea would be, take profit in this zone largely if we can get up here, and then look to reaccumulate, back to the bottom of this range. All right, so price action. There's staking coins are releasing this month. So everyone knows destroys price action because everyone sells their staking rewards. Okay, umbrella. The dead cat bounce, exit liquidity is on most of our minds, and at the same time looking to buy on a retrace. The rollup was a big question. Appreciate it. Okay, no problem. All right, guys. Well, I'm gonna probably wrap up here. Thanks for everybody joining. I hope I got to everybody's questions. I think there was a question about interest rates. Got that. Dot, Ada. Let's see what else we got here. All right. Well, take care, everybody. Let's see what price is doing here. Oh, the other thing too, the other kind of key area I was watching was, let's see here. So we drew this general uptrend channel, which could be a place to look at leaning into if we do get a sell-off. This is the other kind of big one, right? This trend line over here. We took it. Is this going to be a fake above it and then a rotate back below? It might be. So, my current stop losses, I'm sitting here, what I'm looking at thinking myself through here is my current stop losses are right around over here, below this wick here. So if we were to rotate back below all this price action, then I'll be out. What I'm looking at is I'm thinking for my leverage trades, if we can get a 4-hour print, now that we've come into this area right here, the next thing I'll do is I'll probably slide my stops just under this 4-hour wick, because I think that'll end up being a 12 hour. Yeah, it's going to end up being a 12-hour. It might be a little bit too aggressive because odds are that the market's going to want to kind of print maybe a bull flag on a longer time frame. So kind of the next structure I'm looking for is something like this on like a 12-hour. So what I've got to do now is I've got to figure out how to manage my trades around that. If we were to get this sliding price action, how far down would that slide? Would I end up hitting a stop loss over here? But where's that 50-day at? You see me just walking through this right now. The 50-day is at 42,836. I don't like taking trades per se as it touches this trend line, this SMA. I care much more about the daily closes above or below, which gives me that indication of momentum. And then I look for interesting horizontals in and around that area, like this weekly level is what I'm really watching. This trend line doesn't matter to me for price action analysis. I don't really care about this trend line looking at like short term. It's not an area. I wouldn't look to buy this trend line per se. I'm looking at maybe these horizontals over here, right? 42.7 or whatever, which happens to be right where the trend line is, but it's the horizontal level that matters, not the trend line, not the 50-day moving average. Just a small note. But I'm watching this going, if price were to break down, see, I was thinking about yesterday putting some stops underneath here. Because the odds are, if we lost these levels without a quick bounce, if it doesn't bounce quickly back out of here, it's wanting to rotate back down and test this area over here. So anyway, just keep an eye on that. Let's see if this support holds or not. That's that weekly level at 43,148. About the 1 hour at the lowest I'll really ever watch too. But I think it's 1K above my current stop loss for all my leverage positions. It'd be interesting to see if that holds. All right. Thanks, guys. Winking face. All right. Take care, everybody. I'm going to throw on some Doge-wave outro, and then we'll get rolling.